Money. It's the lifeblood of our economy, the oil and the machinery of our daily lives. We earn it, we spend it, we save it. It's as essential to us as the air we breathe. But have you ever stopped to think about what money really is? It's a promise, a trust, a shared agreement that this piece of paper or that coin has value. Now imagine a world where that trust is broken, where the value of your hard-earned money suddenly plummets. That's what we call a currency collapse, an economic nightmare that has happened in history and could potentially happen again. But before your heart skips a beat, let's clarify that we're not talking about any currency. We're talking about the king of them all, the US dollar, the currency that has held its throne in the global economy for decades. Now let's get serious about the greenbacks, or more specifically, the US dollar. Before we continue our venture into the fascinating world of currencies, if you're enjoying this content, don't forget to hit the subscribe button for more insightful videos like this one. It's a small click for you, but a big help for us. By subscribing, you're supporting us in creating more content that helps you understand the intricacies of the world economy. Now let's get back to the greenbacks. As we've seen, currencies can collapse due to political instability, economic mismanagement, and unchecked inflation. But could the mighty US dollar ever fall like a set of dominoes? Let's delve into that. Ever played dominoes? Well, economies can fall like them too. Let's understand why. Stability is like a tightrope walker's balance. It's a delicate act, and when it sways too far in one direction, it can collapse. Three main culprits often push this balance off kilter: political instability, economic mismanagement, and unchecked inflation. Think of a country as a ship. The government is the captain. If there's political instability, the captain is constantly changing, and it's hard to steer a steady course. This uncertainty can scare off investors, both domestic and international, causing the value of a nation's currency to tumble. Let's talk about economic mismanagement. Imagine you're baking a cake. You need the right ingredients in the right proportions. If you use too much of something or too little of another, your cake could end up a disaster. Similarly, economies need a balanced mix of policies: fiscal, monetary, trade, and so on. If a government borrows too much, spends recklessly, or fails to encourage economic growth, it could lead to a currency collapse. Lastly, there's unchecked inflation. Picture a balloon. If you keep blowing air into it, what happens? It bursts, right? Inflation is kind of like that. It's the rate at which the general level of prices for goods and services is rising. A little inflation can be healthy for an economy, but when it's left unchecked, prices skyrocket, making the currency worth less and less. This can trigger a currency collapse. So, with all these potential pitfalls, you might be wondering, could the mighty US dollar ever fall like a set of dominoes? Let's venture into that. The US dollar, often called the greenback, holds a position of strength, but why is that? Well, let's dive into it. The first major strength of the US dollar is its status as the world's reserve currency. This means that it is held in significant quantities by governments and institutions as part of their foreign exchange reserves. This is not just a title, mind you. It's a testament to the trust and confidence that the world has in the stability and strength of the American economy. Speaking of the American economy, that brings us to our next point. The strength of the US economy itself is another towering pillar that supports the might of the dollar. With a diverse and robust economic structure that spans across various sectors like technology, healthcare, and finance, the US economy is like a well-oiled machine that keeps churning, making the dollar a reliable and steady currency. Now let's talk about trust. The world doesn't just trust the US dollar, it trusts the US government. The government's ability to uphold the value of the dollar, its commitment to its fiscal responsibilities, and its robust political structure all contribute to the strength of the dollar. The value of the dollar isn't just about numbers and economics, it's about faith, reliability, and the power of a promise. Furthermore, the International Monetary Fund, or IMF, keeps a close watch on the Federal Reserve to ensure stability. This monitoring, along with the Federal Reserve's own policies, helps maintain the dollar's strength and stability. So, the US dollar's strength lies in its status as the world's reserve currency, the robustness of the American economy, and the trust in the US government. It's like a well-crafted symphony, where each instrument plays its part to create a harmonious and powerful performance. Sounds like the dollar is the Superman of currencies, right? But even Superman had his kryptonite. So stay tuned as we uncover the vulnerabilities of this financial Superman in our next segment. No one's perfect, and that includes our friend, the dollar. Even as the world's reserve currency, the US dollar has its vulnerabilities. One significant weakness is its reliance on government fiat. In simple terms, the dollar's value is because the government says it has value. It's not backed by gold, silver, or any tangible assets, but rather by the trust in the United States government and its economy. Another vulnerability is high inflation. While the US has managed to maintain relatively stable inflation rates, a sudden surge in inflation could potentially harm the dollar's value. For instance, if the prices of goods and services increase rapidly, the purchasing power of the dollar could decrease, meaning you'd need more dollars to buy the same amount of goods. Lastly, there's the issue of growing national debt. The United States has one of the highest national debts in the world. While this isn't an immediate concern, as the US government can print more money or raise taxes to pay off its debt, it's a long-term vulnerability. If investors lose confidence in the US's ability to manage its debt, they might start dumping their dollar holdings, which could lead to a fall in the dollar's value. So with these weaknesses, is the dollar destined to fall? Let's explore that. The question on everyone's mind, will the day come when the dollar collapses? Let's dive into the heart of the matter. The thought of the US dollar collapsing can be downright alarming, and quite a conversation starter at dinner parties. But how likely is it really? The US dollar, much like other major currencies, is based on government fiat. This essentially means it's backed by the trust and confidence in the American government and economy. While this might seem like a weakness, it's a common trait among global currencies. It's like being in a boat with everyone else. If one sinks, we're all going down. But the good news is, history and the International Monetary Fund, or IMF, are on our side. The IMF keeps a close eye on the Federal Reserve to ensure our boat stays afloat, providing an extra layer of stability. But let's entertain the possibility, however slight, of a dollar collapse. What could trigger it? High inflation and debt are the usual suspects. If inflation spirals out of control, or if the US finds itself drowning in debt, it could potentially shake the confidence in the dollar, leading to a currency crisis. But remember, this is a worst-case scenario, rather like a meteor hitting the Earth. Possible, but highly unlikely. In the grand scheme of things, the US dollar's status as a reserve currency and the strength of the American economy provide stability. The dollar is essential for global business and is widely held as a reserve currency. This makes a total collapse highly unlikely. But what if, despite all odds, the dollar did collapse? What would that mean for you and me? Well, stay tuned, because we're about to delve into the consequences of a dollar collapse. Let's imagine a world where the mighty dollar has fallen. It's not pretty, folks. The first thing we'd see is an increased cost of imports. Everything from your morning coffee to the gas in your car would have a heftier price tag. This is because the dollar's value in the international market would plummet, making foreign goods more expensive. But that's not all. Borrowing rates would also shoot up. With the dollar's value in free fall, lenders would demand higher interest rates to compensate for the risk. This would make everything from mortgages to student loans significantly more burdensome. And let's not forget about inflation. With the dollar's value declining, the prices of goods and services across the board would skyrocket. Your hard-earned savings? They could be worth significantly less overnight. Scary, isn't it? But fear not. There are measures you can take to protect yourself. When the going gets tough, the tough get going. Here's what you can do to safeguard against a dollar collapse. Diversifying your investments is a wise move. Don't put all your eggs in one basket. Spread them across different asset classes. Another preventive measure: holding assets in other strong currencies. This can offer a cushion if the dollar dips. And let's not forget about hedging strategies. These are financial moves made specifically to offset potential losses. It's like an insurance policy for your portfolio. Remember, it's better to be safe than sorry. Let's rewind and go over what we've learned today. We took a deep dive into the world of currencies, discussing why they collapse and how the US dollar stands strong. We explored its strengths and weaknesses and pondered the question, will the dollar collapse? We also outlined the potential consequences of a dollar downfall, from rising costs to increased inflation. But fear not, we also touched on some preventive measures to safeguard your finances. And that's the dollar dilemma, folks. Remember to subscribe for more engaging content and stay financially savvy.